Hey, it's Matt with PriceActionTradingSystem.com, and I believe today is Tuesday the 25th, and this will be our chart lesson for the day. It was an interesting day because we really had a relatively strong downtrend here early, but we found this support down here around 34.22, and we just couldn't get through there, and then the market reversed. And obviously if you measured that first leg up and then brought prices over, that gives you a measured leg, and that's about what we got back to the upside. We actually went a little further than that. So I wouldn't really call this a range day. I wouldn't even call it a reversal day either. We just had a trend down and a trend up. You can see for a good bit of the day you can still see the price, the EMA is pointing down here, and prices are starting to swing above, which gives you a clue that we're probably going to get a break soon. And we tried to make a new low, and we came within a few ticks, and then they just could not get through this support level right here. But notice we tested once, twice, 3 times, 4 times. We came back a 5th time and tested that. And eventually when prices can go lower, they're going to start going higher and testing the higher resistance, and we just kept going, and we basically came back. Notice how we never came back and tested this when we came through. So that's what this was. If you put your line across there, I believe that's just, you can see where we came back and we're kind of testing that price level right there. You look across, that was where your closes were, and this is where they are on this side. So that's basically what we were doing. And when we were headed down here, my guess is if you look back here from yesterday, here's where we opened yesterday, and this is where we closed from Friday. So there is still a gap between here and here on the daily chart. And my guess is that's what prices were trying to attempt to do right here when we were working lower, was to try to fill that gap, but this support was just too strong right here. So it was really we spent a lot of the day here sideways, but just don't lose sight of the fact really until right here when prices got above the EMA and it started pointing up for the rest of the day. Really, you still had a downward bias until that point, because right here is our first break of this trend channel, and prices are probably going to try to make a new low. So you got to be careful about getting long in here. And you know, people ask me, well, how do I know when to get long or when to get short? These are transition points, and you don't really know. You probably only want to go long with a really good trap. So for the most part, you're looking for shorts. So I hope that's clear. But let's back out and we'll talk about the trades, and we'll wrap today up. And you had to be really patient, because we had to wait a little bit to get a trade today, because 7 o'clock came right in here, and you just can't go short into that support. At this point, if anything, it's flat to an upward bias at this point, because we traded up into this. We actually kind of traded back down, so it's really just neutral at this point. So there's no way you really want to go short there, even though it drops on down and keeps going. There is a little clue. Notice that high, and you try to go higher once, twice. But I still would not take a short right there, because 9 times out of 10, it's going to bounce on you. In this case, we drop on down. Once you start getting down in here, unless you get a second entry short or something, or some kind of trap, you're just starting to get too far away from the EMA, so you can't go short way down here. People will get short down here and then ask me why it failed, or down here. And just, sure, we still got a trend line going here, but it's not going to go much longer before it snaps back. You want to you can't enter this. Notice that's all one move down through. That's a real tight channel. You just can't enter that that late and that deep into a trend. You got to wait on a correction. And then finally prices come back, and you get a, notice you made a new low there, and you get a first entry and then a second entry. I marked that green because that bar, it's a very small low risk bar, but it's still very neutral. It's a doji. There's only 5 ticks in that bar, So it's very low risk. So, and it is a second entry with the trend. It's at the EMA. It's at the midline. So you might risk that short. If you had a better signal bar, by all means, you want to go short there. But on my chart, it's just not a very good signal bar. So, and then we drop down and you get a second entry long here. But look how tight and narrow that is. If you're going to enter, though, this is where you have to do it right at the very lows. Generally, you want a higher low, and that comes here, and then you're all the way back to the highs again. And generally, you would probably want to steer towards going short out of here rather than long because the bias is down. So you could get, you know, you're basically counter trend trading, even though it's a range here to some degree. But this is pretty flat. And this does fit our criteria, so I did mark it green. You may go long there. Just basically because you made that low, you test it once, you test it twice, and it is a second entry long, new high, first entry, second entry. And then it just gets too congestive here. And again, it's a little bit of a repeat pattern, but we don't break higher right there. So you know, it's another one. If it would have broke higher right there, I'd say go short because it is a repeat pattern. But the fact that it doesn't break higher scares me away from that one. So here it is. It's 9 o'clock, and we really don't even have a good trade set up yet. It's just been one of those days. So, but suddenly we'll get a rash of them over here that are pretty quick and easy to read. So, but notice we drop on down, and we bounce here, and we come back to the trend line. We just came off the low, so even though we didn't get back down here, we still traded down, but look where we're headed. We're headed back over here. Prices, we're just having a hard time getting back to the trend line. So, but notice you make a new low, you get a first entry, and you run up and you get a second entry short there. That bar's too neutral. It is a long way away from the EMA. It is the possible key entry point, and it turns out that's it. So you could go short right there if you had a better signal bar. I think you're better off to wait on the lower high on my chart because it's just, plus notice your trend line working up, and we have no break of that yet. But finally we get a break, we try to come up and we get that lower high with a big bearish bar. That's where I like going short. Then there's a failed second entry long. Just make sure that you got room to get out. That's really the key there. If you got room, take that short. And notice you get, it moves enough to scalp out and even get a little bit of a runner, but then it bounces real quick. And then notice that new low, and you get a first entry, and it runs up right back to the trend line, and this confirms that trend line on the second entry short. Look how bearish. Take that bar. There's a lower high here, but when this ends up as almost a doji, that's mostly bearish, and it is a lower high. So again, that's one you could really argue for it to be green, but the fact we didn't take on off without and we didn't get a better signal bar. Notice that trend line working up again, so we could try to push up, and guess what? That's what happens. Now you got a failed second entry long and a big bearish bar. Go short. Then you get a lower high right here. Just make sure you got enough room to get out again before you reach these lows. And notice how it just gets stuck here. And we made that low. We test it once. We test it twice here, but that signal bar is not good enough. But then we make a higher low right here. But the trend channel line's still in play. There's not much room back to the EMA. This is congestion. So you're better off to leave that one alone. It would have been a great setup, but I just think it's too early to be looking for a long. There is a failed second entry short right there that leads to a trap and go long. I didn't mark that one either, but technically you could take that trade. I should at least mark it green. And I really didn't like it to the long side because it looks congested. There's 1, 2, 3, 4, 5, 6 bars there. At least 2 of them don't have a body. Once you see that, it's suspect on a breakout. And you can see basically we made 2 legs up. We run down, we get a first entry. And notice, let me back up here, that's the first close outside of this big trend channel, and that's a fairly strong trend. So we're going to make a retest at a low. Very high probability we're going to try to make a retest at a low. So when we start heading lower here again, you really need to be looking for shorts. I don't have this on here, but you can see there's a little channel. And so you try to get it go higher once, then twice. Generally, you want this to be on the other side, but this broke higher and turned down and went out all in one bar. So you may take that one. I marked it green because it's not a perfect setup. But notice you get a lower high here with a big bearish bar. And you could call that a double top. So a first entry, second entry. So you might look at that as a second entry. Only problem is it's so close to the lows here. You just came off the highs. You may take that trade though, if you saw the failure, because technically that's a double top right there. So first entry, you can see two legs there clearly, and then that fails. And you got to assume we're going to test the lows. You just have to be careful with that going short into that trend channel line there. And maybe it was over here all along, and that's just a midline there. But to me that looks like an overshoot, because you just get that one shoot through and then we reversed. So it could be like that, but honestly I think it's an overshoot. And then we tried to come low. We get the break of this we get the overshoot. That would tell you right here to be real careful getting short at the trend line, because we overshot it. We'll probably overshoot this side at a very minimum. And so notice the new low, first entry. Then we try to go higher. Technically there's a second entry short right there, but that's too congestive, and you would have got stopped out of that one only to see it drop on down. But you can see that's all still part of one move. So that looks more like two legs back than this does. So I like that one. Big bearish bar. And plus it looks like a long, they got people going long and then they reverse it. So it's like a double trap. Really that's just congestion. And I don't have the lines drawn there. I drew this on a couple of people's charts and sent it to them. But let me show you what really happens here. You got a little range, and you fell out the bottom, then you fell out the top, and then you go through. And there is a downward bias, so the one that tends to work is that would have given you the good scalp goes out is with the trend. So you got to be careful buying here, especially trying to get long right back into the highs of the EMA and that little range. So I hope that's clear. But then you drop down and you make that double test, because we got a low here. You test it once, you test it twice. That's a nice bullish bar, and you got room back to the EMA. And notice how many times you bounced here. Once, twice, 3 times, 4 times, 5 times. That's the 6th time, really. You might count that all as one, but that's still 5 times. So that changes everything there. You might go long there. It's still aggressive because we don't have a new low in place and the bias is still down. This thing takes off. You get a first entry and you get a second entry and even a third entry, but the failure comes when this breaks lower here and turns up and it breaks higher right there. Notice that prices never broke higher even after this one or this one, but it's finally this third time. So it's almost like prices try to go lower 3 more times after. So really you can clearly see 2 legs up and then it fails. So I like taking that one. It's a little bit aggressive because it's not a perfect setup, and we still don't have a new low in place. But take it and draw your trend line. I actually drew the trend line off the highs and drug it down, and you can see it does fit better like that. So we run up, we come off this side, you make a new high, and that's just a first entry. So I'm not crazy about taking that one. You may look at this like a failed second entry short, because notice that low and you go lower once and there's a little bit of a correction right there and it goes lower again. So if you saw that and counted it like that, you could take that long. I'll mark it green. It's still a little aggressive because it's not a perfect setup. Just wait and see if you get a higher low, and you do, but then you don't get a very good signal bar. But by being patient, it pays off, because now you get a sure failed second entry short there that breaks lower and then turns and goes up, and then it rockets on up. and that you could have ridden this all the way up and well into the close here. It's obvious this trend line's in play. We actually come back to the trend line one more time after 2 o'clock. Again, that's just a first entry though. So a lot of greens today, but there were still plenty of trades, even if you just count the red or blue. 1, 2, 3, 4, 5, 6. Still 7 trades there. It was a little slow. It really was, especially for that much movement. But anyway, I hope you had a good trading day today. Maybe it'll pick up again. We'll have a little better day tomorrow. And I know a bunch of you got confused on this because it looks like a range, but that's why you got to draw these trend lines and make sure you're reading it properly, because yeah, that looks like a range and it does have range-like properties, but you can clearly see that channel, and that's your first break. And so prices are probably going to test the low again, which they do. They don't quite make a new low, but they try. And eventually they give up and go higher. So draw your trend lines, follow the rules, and hopefully it'll keep, hopefully you'll fare better if you follow the rules. And I get people that ask me why trades fail, and then you look and they're going long with a signal bar that looks bearish, like that right there, or like that right there, or they're. Make sure you understand that the signal bar, the only place we ever enter is 1 tick below the signal bar if going short, and 1 tick above the signal bar if going long. The signal bar always makes the highest point in the swings or the lowest point in the swings. There's one, there's one. There's another swing low and a low point. And you can only enter 1 tick above those bars. You can't go to the next bar and say, okay, I'll enter here 1 tick above this one, or the next bar after that. You're too late then. You always enter 1 tick above the signal bar or 1 tick below the signal bar. And if you can't enter there, you can't enter the trade. And so if you see a long, let's just find a good example like right here. That's your signal bar because it makes the lowest point. And yeah, that's a bullish bar, but you can't wait and go long above it because this is your signal bar, and we only enter in one place, 1 tick above that. Now when it broke lower here, that creates another swing low, and it's a higher one, plus it creates a second entry when it goes out right there. So you could, in that case, since it's an engulfing bar and broke lower, when it went out the other side, it's a second entry, so you could enter long on that one, but that's kind of unique on that engulfing bar. So that'll probably confuse half of you, but that's the way you'd play that. If it doesn't make sense, don't worry about it. Stick to the basics, and it'll come to you. So only problem is when I say stuff like that, the next day I'll get 50 emails about engulfing bars, or 25 people that took a trade on an engulfing bar just because they saw an engulfing bar and they remembered that, and they think, well, that's a good idea to go long or short, and then they wonder why it fails. So don't make that mistake. But anyway, I'm going to wrap it up. We'll be back again to do it tomorrow. I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.